Chrissy, thanks very much for the intro, and if the music and that story didn't get your pulse rate up, then hopefully the investigative story does. So, but thanks. And look, been plenty of discussion up to now and certainly later in this conference about gold, but the story's a little bit different here. This is a silver story, silver only, and it is the only silver only project in Australia. Great grade. I'll keep going back over and over that. Grade's king, and we've got it in Spain. So. If you are thinking about investing in silver, then you need to be investing in Investigator. Normal one, and what do you really need to know about silver? And there's only one thing now in the current market that you need to know about silver, and that is that the industrial demand is skyrocketing. So decarbonisation of the world requires electrification. Everything that requires electrification has to be connected by something, and there's a little bit of silver in just about every part of that. So I'll give you some metrics later about what's happening with the silver demand, but certainly demand is outstripping supply. What do you need to know about silver? You probably know a whole range of things, but may not even know that it's in a thing called silver sulfadiazine cream, which is SSD cream that gets put on burn, so it even has antibacterial qualities. But we'll leave that behind. Most of it's getting used in jewellery. Some still is getting used in X-ray films and conventional photography, but certainly a lot of it now is getting consumed in photovoltaic cells, or in fact the solar panels, and also in electric vehicles. So the interesting metric in the last couple of years is that the consumption of silver in solar panels is going through the roof. 2022, there was something like about 120 million ounces consumed in solar panels. That was up 65% to 194 million ounces last year. And the deficit in the supply and demand is that around about 900 million ounces of silver gets produced each year, and in the last 3 years on a trot, 1.2 billion ounces have been consumed. So there's this supply-demand shortfall that's coming out of physical stocks. What's driving that? Certainly not the conventional putting it under your mattress silver bar, but certainly, as I said, the decarbonisation and use in electronics. There's even solar panel fences being marketed now, so you don't have to put it on your roof. You can actually build your fence between your neighbours with solar panels. Where's it coming from? And traditionally, physical primary silver came out of South America, out of Mexico and Peru. And over the last 8 years, their production has dropped off by 25%, and they're now at their lowest annual production in 14 years. So again, as I said, global demand is increasing, and the forecast is that 85% of known reserves of silver will be consumed by 2050. People always say, and I do reference the gold-silver ratio, and I just want to walk through what this is. It's a really simple metric. It's just the artefact of the gold and silver price. It's about how many ounces of silver you need to buy to have the equivalent value of an ounce of gold. And historically, it's been around about 65. You can see here a departure back from about 2012. So over the last 10 years, it's been increasing. A couple of crazy step-outs here in February, and this was when part of the silver squeeze occurred in the States. But we're currently, and going to go back one, but we're currently sitting over here at about 82 or 85. I sat in on a podcast a couple of weeks ago where some of the luminaries around the world, Pierre Lassonde and Eric Sprott, were involved, and the forecast is that this silver-gold ratio needs to be back below 70, or should be back below 70, as people start to move out of more expensive gold and into silver, and the silver price increases. A 70 ratio at $2,500 is somewhere north of $35 US, so $10 ahead of the silver price at the moment. So all of the planets are aligning that silver is on the move, and as I said, the industrial demand is meaning it's skyrocketing. What does that mean for us? And it's a really simple thing for us, and our share price and Investigator moves in lockstep with the silver price. And this is clearly a product of the fact that we have $2.5 billion worth of silver in the ground in our Paris project in South Australia, and we are the only silver-only investment on the ASX. So there's a number of other peers who have a base metal project with silver credits or a higher silver grade in them, but we are the only primary silver production opportunity in Australia. And it leverages all about to silver. And you can see here, and somebody picked me up the other day and asked why we had a departure here, and in fact that's when we raised money in December last year. So logically our price came off, and then subsequent to that you can see we've recovered. and just in the last, certainly last few weeks, chased the silver price up and then followed it back down. Sorry, I'm just one step ahead of myself. So what do you need to know about Investigator with that background? So as I said, a project primarily focused in South Australia, large land holding in South Australia. Our Paris project, 57 million ounces of silver in resource. We're about a 7-hour drive from Adelaide up here to Kimber, and we're about 60 kilometres north of Kimber. A very benign part of the world, and I'll talk about the advantages of that in a minute as well. Quite clear, I'm Scottish by background, so a fairly frugal approach to how we spend our money, and where we can, we farm out other parts of our tenement package. So out to the west here, nickel, uranium prospective tenements are farmed out to Osmond. A big patch of ground here in the Stuart Shelf was farmed out to DGO. DGO was taken over by Gold Road. Gold Road have earned their 51% interest in those tenements. And look, behind the scenes, DGO are getting the band back together, and they'll take those tenements back at some stage, and there'll be a reinvigorated exploration program happening in those tenements. We do have some tenements right out here to the east, almost on the border next to Broken Hill. Took us a long time to get some native title agreement in place there, and we've done first exploration, but watch this space. Our focus is very much here at Paris and out to Morgan's, about 80 kilometres to the east. Again, prospective for silver and base metals. The other thing we have is a little bit of a step to the side, and people did ask me what I was smoking when I got involved in a tungsten project. I've got a bit of history where I ran a tungsten project in Spain for a couple of years. I was the founding director of Almonte Industries, which is TSX and now ASX listed tungsten producer. So I know a little bit about it, and the money to be made and lost in tungsten is not so much in mine operations, it's about your offtake agreement. So, and I'll talk about what we're doing with Molly Hill at the end. Picture tells 1,000 words, and this is a thing of beauty, and some people in the audience will know a bit of my history. I don't go anywhere anymore where there's either rainfall communities, farmers or whatever. So the projects that we're involved in, primarily Paris and also Molly Hill, are places where there's no conflicting land use, there's no Indigenous challenges, we don't have high rainfall, we don't have downstream water users, and we don't have to relocate a village or something like that. So this is Paris in its beauty. You can see it's drilled out on 25-metre centres. It's about 1.2 kilometres north-south. It's about 800 metres east-west. And by scale, you can see there's a couple of vehicles here parked up in the shade. So very simple mining. It's near-surface mineralisation. And as I said, our impediment to start this is going to be very minimal. We're marching through the normal processes that are required in South Australia to get this project ahead. Paris had a pre-feasibility study announced in November 2021. A little bit of a different silver price environment, less than it is now, but really robust PFS metrics. Mining 27 million ounces of silver, great return on capital, but relatively straightforward. This is a very simple open pit mine. 75% of it will be rip and dig. We won't have to drill and blast. We're going to be the first in South Australia to do a dry stack tailings exercise. Rather than pumping tailings out, we'll filter the tailings and take them out to the waste dump. What that does for us is it recovers far more water. So in an arid environment, very important for us to get the water back. PFS studies, as I said, no doubt a little out of date, late 2021, but certainly a huge margin. $34 Aussie was our base case selling price. Today we're talking about a $42 Aussie silver price. So even back then, quite a substantial margin with a $17 all-in sustaining cost. The steak knives in the story is that we do have a little bit of lead in the resource, and in the PFS we only concentrated on getting the silver out. We wanted to sort of push back some of the naysayers who said a silver project on its own won't get away. We've been able to demonstrate that, and in the DFS that we're completing at the moment, we're looking at how we can recover some of this lead. It's not easy lead to recover. There's some sulphides, there's some oxides, there's a few curiosities in it, and the work that we've done in the DFS says we can recover some. It's not a particularly pretty concentrate, but we do only have to truck it down the road 300 kilometres to Port Pirie, so it doesn't have to go all around the world. So no doubt we'll get some contribution of the lead out of our DFS study. And that's coming up. We're sort of getting to the pointy end of that, and we'll be putting the DFS out into the market after the end of the first half. Again, as I said, a thing of beauty, really simple open pit, 5 metres deep at this end, 120 metres deep at the other end, conceptually mined in a series of stages. Some value add, we're looking at putting waste back into some of those pits, which we didn't evaluate early on. But we're marching through these tasks to complete the DFS study. We had to take a little bit of a breath along the way because this area here had some native title restrictions. We got those removed, we extended the resource, and that was the resource that we're using for the DFS. We're, as I said, completing tasks for the DFS study. But probably the most important thing, given this is going to be a significant earth-moving exercise rather than, in fact, a drill and blast mining exercise, we've signed a strategic alliance with Golding mining contractors, and they're going to work hand in glove with us to develop the mine plans, the schedules and the costings that will feed into the DFS economics. We then, on the completion of the DFS, we then have a document that we provide to the South Australian regulators and make application for a mine lease. Once the mine lease is granted, then we make application for an environmental permit. I sort of waved my arms around suggesting that's a 15 to 18 month time frame. So looking at an early 2026 decision as to development of the project. Exploration within spitting distance, we've by nature focused on Paris, which is here, but within 5 kilometres we had some great intersections previously at Apollo. You can see there 8 metres at 1,200 grams silver. And in the capital raising we undertook in December, we took an approach that we were going to fund a program where we'd throw everything, including the kitchen sink, at trying to find the other Paris. So there's a whole range of things that we undertook, a couple of different passive seismic exercises, gravity surveys, soil sampling, and we also did 5,000 metres of air core drilling, so drilling to refusal to be able to get geochem samples. That's just coming through the pipeline. We should be seeing some of the assays out of that air core drilling in the next few weeks. A little further afield, and about 80 kilometres to the east, and again following the UNO, and I should have pointed it out, this UNO fault's one of the key mineralising structures in the district. We've been out there in 2022, and to the credit, the guys did a drill program. These are the maroon coloured dots on this. 24 out of 27 holes on that first pass drilling hit mineralisation, which is a spectacular result. We'll be back out and chasing some of those targets later this year. Molly Hill, as I said, a little bit of a step to the left, and why would we get involved in tungsten? As I said, I know it well. I knew this project when I was involved in Almonte. Good grade, small, again, no conflicting land use, no downstream water users, all those sorts of things I look for. But it was a project that is owned by Thor. We're earning in under a 3-stage earn-in, and we've met our first stage commitment of $1 million spend. We wanted to revalidate the resource. The resource will be out in the next couple of weeks. From that, we'll push that into a scoping study, and by sometime in the second half, we'll commit to how we want to take this project forward. Neat, tidy little project. Got some great attributes in that it has a molybdenum credit in it as well. I've managed to say that, molybdenum, and also a small copper bonus out of it as well. But scoping study we'll have out in the second half. What's the value proposition? You've heard it all before. It is the highest grade silver project in Australia. It's in a great jurisdiction. South Australia takes some time, but it's all doable. There's projects that have been approved more recently. As I said, it's in an area that isn't going to be challenging for us. We get great support from the local community. We've got some regional exploration opportunities that are going to plug into the back of Paris, and we'd like to think we could extend that mine life, and also critical mineral exposure. And I didn't mention in Molly Hill, it actually has what's called a major project status in the Northern Territory, which means all of our applications go to the top of the pile when we put things in. But ironically, the government departments are basically pulling the process, pulling your application through the process, and we have confident we'll see other forms of funding, whether it be through NAIF or so on. Plenty of cash, and a great time to have cash in the bank. We raised cash, as I said, in December, and we've got some news flow coming. So we've got DFS study outcomes, update for the Molly Hill tungsten project resource. We expect to get some news out of the Paris regional exploration, and also some of the things further afield. And I didn't mention, but we'll be out drilling at Curnamona, which has got some great historical gold and copper hits. So, as I said, if you're thinking about investing in silver, you need to be thinking about Investigator. Thank you very much, Chris.
Thank you. Yeah, I've promised to be really nice to the government in WA because I'm actually going back to see them again next week. So my view is a little bit different. You do not need a change in government to change the uranium policy. If the Liberals do get in, fantastic. But that's not actually the main game. I put up a little bit of humour, a little bit of content. Again, I'm going to try not to take the piss out of Chris Bowen too much, but in this instance, Chris has realised that very recently they actually need gas in the system because he's refusing to use nuclear. If the country was to go down a nuclear route, which I'm quite supportive of, you know, we could actually decarbonise this economy. That said, I'm talking today about uranium, and Cauldron is the best exposure to the uranium sector with outsized returns for WA. Now, why is that interesting? Because the WA policy is going to change. My mantra and the number one thing I can do for shareholders is change a policy, because there's like 10 bags on the share price literally doing that. So we'll talk about that. And this is not, you know, when you're talking about your usual specky 10 times return, this is not discovery risk. We've got 31 million pounds in JORC already, and actually we're going out drilling again in a couple of weeks. There's a huge amount of uranium there. This is policy risk. To overturn a policy that's only been in place for 7 years, and to overturn a policy that the majority of the state wants overturned. So if you back me to change the policy, it's a pretty interesting bet. And the smart money is policy changes. The question is when. I do have a problem though, because when that happens and the share price starts running, and that's great, but we become a takeover target by the major uranium companies. And so what do I do then to maximise value for shareholders? And that is bank pounds to the balance sheet. So we are going out to drill out Yanri. That's Yanri. Sorry. We're going out to drill out Yanri in about, I think the bulldozers are out in about 2 weeks. So I think everyone would know the uranium thematic. The global nuclear industry is going gangbusters. Whether or not we build reactors in Australia depends on if Mr Bowen and Mr Albanese win, or if Mr Dutton do. However, mining uranium is an absolute no-brainer. And it just got more of a no-brainer in WA because last week the US banned imports of enriched uranium into the US from Russia. Now, that is really important because it means bifurcation in the market is here to stay. If this was going to resolve itself in a year, they wouldn't bother doing it. So long-term, our strategic partners, the ones who are supposedly going to give us nuclear submarines, are desperate for Aussie uranium. We've got a lot of it. We've got the world's largest resources, and a big chunk of it is in WA, currently banned. But why now? Why change this policy now? Well, everyone knows the nickel price is in a spot of bother. You've already lost about 5,000 jobs in WA, and if BHP Nickel West goes that way, a huge amount more. I have just actually published an article in the West yesterday. What other people don't realise is that the iron ore price is under significant stress over the next couple of years because supply discipline has gone out the window. Simandou is on track for production. Vale are now saying they'll pump another 100 million tonnes in. 85% of the minerals and royalties the WA government gets is from iron ore, and that is forecast to halve. So you've suddenly got a government that are going to be out of pocket about $5 billion a year. So we are very, very, very active at saying to the government the uranium industry can step up. Secondly, we've got nuclear submarines coming to WA, and this is happening. On-site works are going on in Garden Island. You know, when people realise they've got a floating nuclear reactor off their coast and they realise nothing goes wrong and it's fine and actually will create a lot of jobs, then really is mining uranium, and that's such a difficult thing. So a lot of what I do is speaking to investors but also government and media just to raise the level of awareness of this issue, because a lot of the time people don't actually know that there's a ban in uranium in WA. They just assume WA is good at mining everything. So the key points here, in the middle one, the majority of West Australians polled want the policy change. That includes a majority of Liberal voters, a majority of Labor voters, 34% of Green voters, and 80% of One Nation voters. The naysayers suggest that, you know, we can't mine uranium safely in WA. Look, come and talk to me. I can answer any question about that, let alone just saying, hey, look at what the fantastic work the boss is doing over at Honeymoon at the moment. So what does uranium mining bring to WA? Diversification and jobs, and we have a moral obligation to help our trading partners decarbonise. They are literally desperate for our beautiful uranium. Now, we've got one of the world's best uranium projects. It is kind of unfair when you look at that IRR. That's at 75% uranium price, not 93. It's an ISR asset. And capex of around 120 million means that the IRR is literally ridiculous. It's over 100% at today's pricing. So what am I doing in the next 2 weeks? We're going out drilling. We've got a target of another 50 million pounds of uranium out there, which makes this literally a tier 1 asset. And we're starting off some infill drilling. We're going to step out and we're drilling basically between us and Paladin. So Paladin's got a big resource. They've drilled it up to their boundary, 850 parts per million, lovely for ISR. We haven't drilled our side, it's contiguous tenure. So it's not your usual greenfields discovery risk. There is a lot of uranium there. And, you know, we will be putting probably 25,000 metres this year. If I can get a second rig out, we could do a little bit more. We've already delivered an absolutely cracking scoping study, and we get done on the PFS towards the end of the year. And more drilling, because that is the way I change the policy and I put pounds to the balance sheet. Thanks, Chrissy. That's it.
Thank you very much, and I probably don't need to give the presentation, you've pretty much given it, but thanks very much for having us today. And what I'm going to present is a relatively simple story, but there's some pretty strong messages in there, I think, both for Rex and for the overall copper thematic. What you can see here in front of you, there's a bit of information, but I just want you to focus on a couple of numbers on this slide. So Rex in the right-hand column has an enterprise value of about 150 million Australian dollars, and as you can see on the left-hand side, we've got 1.9 million tonnes of copper in resource, plus gold, as you can see on the screen. So we're currently trading at about 3.5 cents Australian per pound of copper. That's pretty cheap, as you'll see, for a project that we have in South Australia that's fully permitted and ready to go. Just before I get into the detail of Rex, and many of you have seen these slides before, but it's really worth reminding ourselves about the copper thematic. If you look at the image on the left-hand side of the screen, that's a projection about copper consumption/demand out into the 2040s, and of course it's an upward trend because of the electrification revolution that we're all experiencing. But for those of us in the industry, this is not a surprise. I mean, copper's been growing in consumption at about between 1.5% and 2.5% compound since the 1950s. So it's a pretty consistent trend. The only thing is it's starting to hockey stick a bit because of that electrification that's really getting hopping, and, you know, the desire to have a greener world, which we're very supportive of. If we contrast that, again, a pretty well-used slide, but worth touching on with the slide on the right, this is exploration discoveries of copper over the previous number of years. And I think, you know, two messages. First of all, no exploration expenditure has been spent in any material fashion for well over 10 years, and on average it takes 17 years to bring on a copper mine. Hillside's been in existence for 15 years and we're at funding stage. So you can see the train smash, well, I shouldn't say train smash, but you can see the issue that's presented with us. There's heaps of demand, the projections are up, but there's not much new metal coming on the bat. So let's turn to Hillside in South Australia. I'll just orientate you. So it's known as the Copper Coast, and there's some very well-known mines in this area. Hillside down here at the bottom, through the famous copper mining district of Moonta Wallaroo, and then the better-known names of Carrapateena, Olympic Dam and Prominent Hill. Those three, as we know, are all in the BHP stable now within the Gawler Craton. If we zoom in on the right-hand image, in this area here, we're about 150 kilometres from Adelaide. The granted and permitted Hillside ML is here, and we also have an enormous tract of exploration ground to add to that. So the focus of my talk today is very much on that yellow postage stamp. This is what it looks like. Open wheat fields, flat, 30 centimetres of rainfall, very low population density, and perhaps to preempt a question, given what Andrew said a little earlier, we actually own the farmland. So we bought the farms. So the only people we have to fight with are ourselves. If we have a look at a long section of the hillside pit, there's, as I said earlier, 1.9 million tonnes of copper plus gold defined in the current resource. The optimised feasibility study we completed in December of 22 focuses on that pink area at the top, stage 1 only. So about 42,000 tonnes of copper, 30,000 ounces of gold for 11 years. But it's fairly self-evident that the resource continues. And so we only exploit 25% of the total resource in stage 1. So clearly there's a stage 2, et cetera, et cetera. The resource, there's been over $200 million worth of drilling done here, but the resource remains open at depth. So the limited information is just a function of drilling. It's not a function of the fact that the grade's dropping away. It's a large deposit. The way we're planning to develop this is a 6 million tonne per annum process facility, and then once it settles down, go to 8, with the ability, with some tweaks in the plant, to go to 10 million tonnes. Proven technology, it's been done before. The most obvious proxy is Carrapateena up the road. Very similar plant, very similar geology. So, you know, this is going to be around for a very long time. It's worth reflecting on these copper projects. They're called IOCGs, iron ore copper gold, and comparing Hillside to some other well-documented ones. I've mentioned Carrapateena begins at about 500 vertical metres, goes well down to 1700, remains open. Same comment for Prominent Hill. Same comment for Ernest Henry. We're only down 700 metres and it's open. You can do the maths. These are big projects. We're just starting. We completed, as I said earlier, and I'll come to it in a slide in a second, an optimised feasibility study. That being done, we're now moving into funding phase for Hillside. We're fully permitted, ready to go. And what's happened since December of last calendar year is two things. We've sought a project equity partner at the project level, and that is, as we'd announced, Nitetsu out of Japan, and friends who may well end up with up to 45% of the asset, and that's work in progress as we've announced previously. Also at Headco, we've introduced a group called MAC Energy, which is a subsidiary of the Salim Group out of Indonesia, who've taken the view that copper is the place to be. So from a balance sheet perspective, we're very well funded. We're in very good company, and it positions us very well to move to the next stage, which is the funding and subsequent development piece, which, by the way, is about 30% engineered as we sit here today. The slide you can see in front of you here were the key numbers announced in December of 2022 when we announced the optimised feasibility study. So 2 points. It's the little yellow postage stamp, stage 1 only, which is only 25% of the resource. And if you run your eyes down the second column, you can see that the valuation was about 1.2 billion pre-tax. Just above that, you can see the copper price and the gold price. Well, we know that the copper price is currently $450, $460, and the gold price, you know, well over $2,000 an ounce. So clearly the 4.3-year payback, thank you, the 4.3-year payback is not getting worse. Just a quick comment on ESG. It's the soft issues have always been the hard issues. I think we've got these well in hand. We have tremendous support from the South Australian government. That image there is actually their image. They have an objective of 1 million copper tonnes of metal per year out of the state of South Australia. The local Indigenous community, the Narungga, are very much a part of our fabric and our group, and we get on with them tremendously and working collaboratively, and strong community support. This is 450 permanent jobs. Little note on Hillside, and it's again not unlike what Andrew referred to. We're in a very good area geographically. This won't be a FIFO operation. 1.5 hours out of Adelaide, local towns, local communities. We're on grid power. We're on grid highway, national highway. We don't have to build any of that infrastructure. In fact, the concentrate goes by road, or will go by road, to Adelaide. One last comment before I close off. CO2 emissions is an important thing. You can see on this chart what the average contribution is per tonne of copper produced. Hillside base case is just on 3 tonnes, but because the national grid is going to be 100%, and there's actually an error on the slide, 100% renewable by 2027, and I'm feeling no pressure, and we will also have solar. This is going to be a very green project. Very few permitted projects in the world at the minute. Hillside is just one of them. There are plenty of wannabes, but there's very few actuals. So just closing, very low capital intensity, will come into production at a low, very low ebb from the point of view of new projects, fully permitted, stakeholder support. Numbers are based on stage 1 only. Have a look at Rex. This is a very long-term project. Thank you.
And thank you for having me today. So I'm here today to talk to you about Ultani, and specifically about our Orient project. So flick through the disclaimer. So Ultani, we listed in June 2023, raised $5 million. Strong board, strong technical team, still got $3 million in the bank. So key focus is the Orient project in Herberton, North Queensland. Herberton is about 100k or so, 120k inland from Cairns. So we bought this project for 300 grand off the administrators of Red River Resources. I was previously the MD and Executive Director of Red River, and I put the project into Ultani. So Herberton is Orient, Isabel Extended, Boonmoo, Antimony Reward. Really today, we're just going to talk 10 minutes, we're just going to focus on Orient. Sorry, is that better? Orient is an extensive precious metal-rich epithermal system. It extends over about 6k, Orient West, Orient East, Deadman Creek. We've mapped it. We believe it's strong similarities to a Bolivian tin silver porphyry system. Our current focus is on the shallow epithermal silver lead zinc mineralization. So we commenced drilling here in 2023. We raised the money, started drilling in August 2023. So far we've done 22 RC holes for just over 3,000 meters, and we've delivered multiple hits of silver lead zinc Indian mineralization at Orient. Orient West, excellent results. So open pit, bulk tonnage, nice big thicknesses, 40 meters, 10 to 40 meters, 100 to 200 silver equivalent, plus high-grade underground potential. So you can see on that cross-section, we've got the cross-section A to A and B to B. So A to A, this is where we're getting a really, really high-grade indium. You can see 1,000 grams per ton indium. That's the highest grade indium drill result ever reported on the ASX. So these are good grades, good underground potential. As we go up through Orient West, B to B, really nice stacked vein system here. Outcropping on a ridge, which helps with the strip ratio. Multiple vein systems. We one mine, we get the other, and so on and so forth. Orient East, again, more bulk tonnage potential. Middle of the system, stockwork zone, veining open to the north and open to the south. Again, bulk tonnage, 38 meters, 190 grams silver equivalent, high-grade underground potential. So we're really, really happy with what we've achieved today at Orient. So this is where we're currently at. The drill rig is over here today, drilling at Orient West. Our plan is to drill 11 holes at Orient West. We'll cover the strike length of Orient West. And with this information, we'll be able to generate an exploration target. We'll announce the exploration target to the ASX. Then we'll come back and infill the exploration target to get a JORC resource, hopefully by the end of the year. We're also planning to drill one RC hole to test a geophysical target, this anomaly here. It's offset to Orient West, so it'll be interesting when we drill that. And we were fortunate enough to get $300,000 in grant funding from the Queensland Government, the Collaborative Exploration Initiative. This $300,000 is going to enable us to drill this deep diamond hole at Orient West. The objective of this deep diamond hole is to test the down dip extension of the Orient West vein system. Up here, we've got epithermal veins, lead, zinc dominant, so it's cold temperature. As we move closer to the source of the mineralization, we hope it will get hotter. As it gets hotter, the system is more likely to become copper and tin dominant. So we'll drill down through the Orient West vein package, then we'll target this deep magnetic anomaly at depth. We believe this could be part of the porphyry intrusion that drives the whole system. So we get essentially 2 bites of the cherry, and it's paid for by the Queensland Government. So our intention is to drill the RC in May. We'll do the 11 holes in May. The guys on site will have a couple of weeks break. Then we'll mobilise the diamond drill hole rig in, drill this hole. 750 metres vertical, about 800 metres long. Assume 20 metres a day. We're drilling day shift only. It's going to take us, say, 40, 50 days to drill this hole. So by the end of the hole, hopefully we'll have a really, really good idea of what sits down here. Deepest drilling to date in the Orient system is about 150 metres vertical, so about to this depth. So yeah, this is going to be great. I mean, there's nothing like being on site when the diamond rig is going. You can when the inner tube comes out of up from the core. You open it up, you look at the core, you're the first person ever to see this core in the world. And then you're thinking, you're thinking about through your hypotheses for the hole, is the core representative of what you think? You're looking at the alteration, you're looking at the mineralization. It's going to be really, really exciting. And when we finish the hole, we're going to do a downhole EM survey down the hole, so we'll see what's around the hole. Also, May to June, we're going to map Dead Man Creek. Dead Man Creek is a stockwork system to the north of Orient West, Orient East. The consultant geologist that we got in to map the entire system for us is a guy called Nick Tate, exceptionally good geologist. Nick was most excited about this he mapped Orient West, he mapped Orient East. He found this the most exciting. This is one of the samples he got from this area. It was drilled partially in the 70s. You can see these holes here. These were drilled by a company called Getty in the 70s. They assayed for tin only. When we look at the historical assay records, there's indications that there's sulfide in the holes, but they haven't assayed for it. So we think this is a really good target for us, so we intend to map it, drill it as well. So it's all, as you know, for a junior company, it's all about news flow. The market loves news flow. News flow drives our share price. So what are we going to be delivering over the next 3 to 6 months? We are going to be delivering the RC drilling at Orient West, so the 11 holes, the deep diamond drill hole at Orient West again, June to August, and the mapping. So we are fully funded to deliver this. We've currently got $3 million in the bank. After the RC drilling and the diamond hole, plus we get the refund, the grant from the Queensland Government, we'll probably have $2.5 million left. It's going to be good. News flow. And what else can I say, really? This really says it all. We believe Orient is Australia's most exciting silver indium discovery. We're going to progress it forward over the next 3 to 6 months. And as we deliver what we say we do, what we say we will drive our share price and create value for our shareholders. So, if you guys want to come on board for this really exciting story, feel free. If you want to talk about it, come and see me on the booth later, and we can talk about Orient. Plus, we can talk about all the other projects we've got, the ones in North Queensland, the ones in Tasmania, that I can't cram into this 10 minutes.
Thanks, Chrissy. It's a pleasure to be back here at RIU, and looking forward to a good week. So as you noticed, there was an announcement this morning, so please take note as we talk through. Please take note. So the ACDC strategy, and so effectively it's the energy transition, the decarbonisation, It's all connected through the critical minerals push, and I guess our angle is the monazite, the mineral that contains the rare earths. And so we're executing our strategy via the mineral sands, which is our access point into the rare earths, and we see that as a safer entry point rather than, say, your hard rocks and your clays. And then we bring along our technology, which is then taking that monazite and doing a caustic crack for that downstream processing in Australia, and that's the opportunity for Australia for that downstream processing. So as a bit of an overview, we went through an IPO end of 22, listed in January of 23, and we raised 8 million. We've still got 4.15, we reported our last quarter, and we've had a busy 15 months. So we completed over 20,000 metres worth of air core drilling across our projects in Western Victoria, delivered a maiden JORC resource of over 600 million tonnes at our Goshen project, so that's our focus project currently. Scoping studies have been underway. We're at the final point of delivering them. And that's for both the mineral sands operation and vertically integrated with our rare earth technology piece. And also we've been busy with our piloting work with Mineral Technologies to gear us up ready for that next stage of development, and also enable us to understand our full product suite and to start having more detailed discussions with off-takers as we move forward. And so that's where really, I guess, our key differentiator is taking this downstream processing onshore. Oops. Board management team. So we've assembled a strong team of rare earth expertise, and it's not always easy to find these guys. I guess we've got Mark as the guru in rare earths over the last 10, 15 years. And so we're all, I think we have 3 or 4 of us here at the conference this week. We're just at booth 85. Capital structure, so as I mentioned, we've still got 4.15 in the bank. Share price might be a touch higher than that at the moment after today's results. But we're near cash backing, so there's a massive opportunity for investors and shareholders currently. So mineral sands, so what are we really looking at? What are the things that are getting us excited? So for the heavy mineral concentrate side of things, it's the zircon and the titanium. And then for the rare earth pieces, the monazite and the xenotime. So the monazite, the mineral, contains about 60% rare earth elements. And so a decade ago, monazite was seen as a waste product, $400 or $500 a tonne. You couldn't give it away. Up to about 12 months ago, it was up to about 10,000 US a tonne. And that's why a lot of these projects are now all getting a fair bit of airtime. So the ACDC metal strategy is essentially to have the heavy mineral sand asset and to then provide that feedstock through to the rare earth processing plant. And so phase 1 is a traditional standard heavy mineral sand operation, doing the physical separation to produce the heavy mineral concentrates, that's your zircon, titania, and then also then your rare earth mineral concentrate. And so there's readily mature markets, well understood, and those projects could execute. And so if you look in Western Victoria where we are right now, there's peers that are FID right now for that exact same execution. And I guess we feel as though our differentiator is the phase 2 part. So we take that rare earth concentrate and then we do a caustic crack. And that's really the first step in towards going towards magnet manufacturing. And so we do the caustic crack, we produce then a mixed rare earth oxide, and then that goes on then to separation. So where are our projects? So we're currently located in Western Victoria. We have probably about 8 or 9 tenements. 4 key project areas. As I mentioned previously, Goshen Central is the focus. And so that's where we've been developing our mineral resource estimate that came out last year, and our scoping study has been based on that project. But we are also actively drilling out the other projects right now. So you can see last year we did over 12,500 metres. We've just completed 9,000 metres, and we're getting ready to go back out in a couple of weeks. The drilling that we did at Goshen was really building to try and find some more grade in our main Goshen project, but the other 2, Douglas and Watcham, was more of the discovery level drilling. We knew there was some stuff there previously from CRA, but to really go and chase some of that down and apply some newer, smarter technology to those projects. And we're really excited about what we saw, and that was the announcement that we released this morning at Douglas. Some really strong results, and so the exploration team is jumping at the bit to get back out there. So the Goshen Central project, so as I mentioned, over 600 million tonnes, really strong assemblage, so really good zircon and monazite grades. And also key to note, it's the 38 micron to 1 mil fraction that it's been based on. There's been technology advancements with Mineral Technologies. Mineral Technologies is a engineering consultancy and also a developer and a constructor of the spirals that you use for the separation. And they can go down to 20 micron now. So once we include that in there, we think there's a really big upside to increase the grade. And also with the drilling that we've done, if you look on the map there, even if you can't read it, just the more pink dots, the better. And so that's where we've found some more higher grade. And so we're going through doing the mineralogy work right now, and we'll be going back to our resource geos for looking for a Q3 release on our JORC resource update. So when we look at our at the project at Goshen, when we compare it to the likes of Astron and VHM that are right around near us, and their FID market caps far greater than where we are right now, and that's the opportunity. So our project we think is going to peg very well against theirs, and so that's where we see the opportunity for investors right now. So the Goshen Central Scoping Study, so as I mentioned, it's very final points of before we can release, but it's going to be a multi-decade project, low impact drilling, no drill and blast. These are strip mining, quick rehab. There's been lots of work done by our peers. I think WIM did their test pit near Avonbank, and the farmers are growing crops there 4 or 5 years later. So it's really low impact mining. And then we have that two-phased approach, as I mentioned, from our strategy above. And so the next steps for the scoping study is really to finalise that scoping study, get that out, and we can really then start talking numbers about the project. That piloting program will be complete, and then we can then further on our conversations with off-takers about our product suite, and then get geared up, ready to go to that next stage, which is then going into a pre-feasibility. On the rare earth processing plant side, so this is probably the area that we'll look to focus on in the near term. And so we're getting lots of discussion and really good engagement from the South Australian government on this project. So we'll be looking to put the plant in Victoria and then take the rare earth concentrate over to South Australia to the Iron Triangle, most likely. And we're getting some really strong engagement. And so with going down the caustic crack process, we really minimise that waste generation. So our ESG credentials are really strong for the project, and that's what's enabling us to have these really strong conversations with departments. And so the localisation study's been complete for the project as well. So we understand the pathway to permitting, we understand our touch points and where we really need to focus on moving forward. And so at the moment we're gathering all our monazite together, ready to go and start a program with ANSTO to go along and do the next 6 months worth of test work. So the Douglas project, this is sort of going back onto the exploration side of things now. This is what we released this morning, and this is what we've been really, really excited when the exploration team were out there at the time and they were calling up, sending through, photos through to us to have a look at it all. Everyone was very excited. And you can see there's really strong mineralisation, 20, 30 metres at really strong grades. And so we're trying to get some mineralogy together as fast as we can. But we know from the Bondi strandline system that's just next door, we do have a reasonably good idea or confidence level of what we think will be in that assemblage. And we know there was an active mine there only about 10 years ago with the Luca just around the corner. So we're really excited about the prospect of the Douglas project, and we'll be back out there in the next few weeks. So the work plan or the news flow for everyone looking forward. So we'll be back out drilling in a couple of weeks' time. We've still got some final assay results to come through from our Watcham stuff. I didn't really talk about Watcham today, but there's lots of good results coming through there now, and the guys are going through, tuning through that at the moment. Obviously, the resource update in Q3 for Goshen, that'll feed in from our scoping study release, and you'll be able to see when we release the scoping study, the sensitivity to grade. And so obviously grade is king, stronger grade, stronger economics, and so we think we're really going to be able to bolster that up. And then we'll also start along with our test work. So in summary, we've got a strong team. We've been very efficient over the last 15 months, really good, strong spend of what we've been delivered to date. Lots of good drilling, lots of metres done, scoping studies are working well, and we provide that good exposure to that critical minerals. I've lost my point now. But yeah, we provide that exposure to the critical minerals sector. And if you want to get on board, then I think ACDC is a strong look. Thanks.
Thank you very much. So we've only got a short period of time to get to know each other, so please go to our website and look at the corporate presentation. It's got a lot more deep dive and it's got all the disclaimer stuff and all the footnotes. So there's my disclaimer done. Start off, front page. We are listed on the ASX and TSX and the OTC platform. We completed an ASX dual listing last year. Corporate advice, if you want to buy shares in Novo, which you should do, grab them on the TSX and bring them across to the ASX. You'll make a killing. So let's start off with, we're a bit different to all the other people that got up here as explorers. We're actually well funded. How many explorers do you know who've got 17 million bucks in the bank and we've got an investment portfolio of around about 50 million bucks? So we've got enough money to execute our program. And if you jump to the bottom point here, we're actually out there looking for other projects. So we're a bit different to people that you've seen. We've definitely got a drill program, which we'll talk about, but we're out there. The key thing we'll talk about is our joint venture with Becher, the Becher joint venture that we did last year with De Grey. We'll talk through that, and we'll talk through some of our projects in the Pilbara. And at the very end, if we've got time, we'll talk about exposure to lithium as well. But we are a gold greenfields explorer, looking for projects that have got 1 million ounce potential for development. So if it's a small 500,000 ounces, we're not really that interested. We're looking for the big 1 million plus ounces, and we've got the funds and the team to deliver. So here's our Pilbara portfolio. We've got about 7,000 square kilometres of tenure, so that's huge. We're going to focus on in the middle here, where you call the Originate Gold Camp. You can see Becher up the top, Nunyeri on the north, down south. And we'll definitely talk about Balla Balla on the coast of Karratha, and just below that is inboard from Karratha. We'll talk about our projects there. In terms of lithium, we did 2 joint ventures last year. One is over in the right near Nullagine. We did a joint venture with Litam. They put $5 million in the business for our pegmatites, 22 kilometres linked to pegmatites. So that's a great deal, 80-20. But more exciting, over on the left-hand side in purple, we did a joint venture with SQM around ground near Azura. You know Azura, huge lithium, nickel discovery, Hancock involved, SQM involved. We had ground around them, and SQM put 10 million bucks in our cash flow, as well as giving us a 75% joint venture. Huge deal. So this is a joint venture with De Grey. I've got a bit more detail, but just to give you a flavour, Q4 last year, over 10,000 metres of drilling was done. Great results, 8 metres at a bit under 5 grams, and that drilling program will continue. But I'm going to deep dive on this one because it's great shareholder value. Nunyeri North, I'm going to do a deep dive on that, but just to give you a flavour, maiden drill program last year, great results, 6 metres at 6, 11 metres at 2.5, 4 metres at 5.7, and tomorrow we start drilling again. Karratha, I won't talk too much about this, but inland from Karratha we own a whole lot of tenements which have a complexion of gold, copper, nickel base metals. We'll be back there drilling in the early half of this year. We did a release last week. You can pull that out and see the projects that we're chasing. Very, very exciting. And don't forget, as I said, Azura in nickel and Artemis and Carlo Castle in copper. So there is base metal presence. And Balla Balla on the coast, it's in our presentation, but we quietly accumulated over 100 kilometres of tenements along what's called the Shoal Shear. And why would we get excited by the Shoal Shear? It's very parallel to the Malinas Shear, which is where Hemi and the De Grey project was finding. So obviously we're looking for the same geological context. And not forgetting Victoria, how could you? We've got the Beltopper project. We've just finished drilling, results in the next couple of weeks, but we did 2,500 metres of diamond. We're looking for Fosterville style mineralisation. We're about 50 kilometres south of Fosterville. So let's jump back to Egina. Huge joint venture, middle of last year, part of our IPO. So De Grey put $10 million into our ASX IPO. They have 10% of the business. But more importantly for shareholders, we've got a joint venture where they have to spend $25 million within 4 years to get 50%. And we'd only drilled 20,000 metres of air core when they did the deal. This ground is right next to Hemi. Do the maths on the evaluation of what they see. They really, really like this ground, and we like it as well. Great deal for all of us, and a 50% joint venture. Who's heard of that? That's great. Our shareholders have got a 50% upside on that, and we can do a lot of things as that programs. So they're running the joint venture. They do know those rocks a little bit better than us. So this is a slide. I just want to quickly show this. Right-hand side is from a De Grey release years ago when they were drilling Ducon, early stage air core and RC work. And look what happened at the bottom. Huge resource potential around Ducon, which they now announce. Now, we can't promise everything, but on the left-hand side was our drilling in May last year prior to the joint venture, and they look very similar. And that's why De Grey was really excited. We saw the same style of mineralisation, the same geological context, it's the same tenure, and that's why we have the joint venture. So we remain a very good leverage for shareholders who, like Hemi, want to get in at a cheap option on a resource. Come and join Novo. So here's Becher. It still remains a 20 square kilometre block of low-grade mineralisation. Don't forget, Hemi's only 1.5 grams, but there's a lot, 10 million ounces, right? So a beautiful block of ground. Our results from last year, you can see them down the bottom, 8 metres at 4.74, including 3 metres around 12 grams. So this mineralisation, as I said, is very anomalous to what you see at Hemi. There's 3 or 4 zones which De Grey and us will chase up, so it remains pretty exciting. And you can see here a release earlier this year actually started to put some sectionality together on the drilling that's been done. So in this Egina base camp, you can see down the bottom is Nunyerry North. We own 70%. Creasy owns 30%, so Mark Creasy out of Perth. We are the managers. It's about 1,000 square kilometres that we're chasing. Nunyerry North is the first of our priorities. Across this whole zone, there's a lot more targets that we'll do. And Nunyerry North, we did the first drilling program last year, maiden program, never ever been done before. And bang, straight off, gold mineralisation. This is a huge 2 to 3 kilometre soil anomaly that the team identified, and the drilling program on day one hit mineralisation with really good results. 6 metres at 6, 11 metres at 2.52, 13 at 1.89, 4 metres at 5.7, 7 metres at 1.34. So this is really exciting. Maiden program results that we put out last week to update everyone, and we're drilling there tomorrow. We've got enough work to start drawing sections, so we have a lot of promise on this project going forwards. So let's summarise. We are a gold explorer. We've got a very global, internationally experienced team. We're focused on big gold discoveries. Quite happy if we trip over copper, by the way, but we're really gold focused. We're cashed up, which is really good. We can execute that program that I just talked about, and we've got money available for us to go and look at other projects around Australia. Egina joint venture is a great opportunity for people. High-grade assaying results coming through from Nunyerry North. Drilling program starting tomorrow, 4,000 metres over the next 6 to 8 weeks. We've still got other targets in the Pilbara and Victoria. As I said, we've got exposure to lithium as well, which is very, very nice. And that's our process. If we do find other minerals other than gold on our tenure, we normally do a joint venture, and we expect joint venture partners to put cash up front, part of our rationale. So, as I said, we're there, we're really drilling strongly, great program, and we've got a great team, and we're looking out there for new projects. So thank you very much. I think I just beat the buzzer. Thank you very much.
Fantastic. Thanks for the warm welcome. 10 minutes is a very challenging spot for a North Queenslander, I will say. Cautionary statement, standard disclaimer. So we're currently sitting at about a $24 million market cap, $4 million cash in the bank after a recent raise, and we welcome onto our register 1832 Asset Management and a bigger position held by Lion Selection. There's a shareholder meeting to approve a second tranche of shares It's a further $600,000, which will probably offset some of the drilling cost of late. We're proudly Queensland-based, Queensland-focused, and we've got a large polymetallic resource, but our core focus is on gold and copper. We've been highly active in our short history, and that's a lot of boots on ground time for a small team, with a real focus now on the Ravenswood Consolidated project. It's the core asset, the flagship, and we are looking to divest the other projects on the board here. An experienced board and management team spanning all sectors of the resource sector, from acquisition, exploration, development and operations. I'm joined by Tav Bates, our senior geologist at the booth, the wild man from up north. Fantastic geo, more than happy to take you through the projects as well, and Matt Price will be here on Wednesday. So Townsville is our home office. I think we're the only ASX listed company with a head office in Townsville, and from a corporate perspective, it actually gives us an amazing opportunity. We're exploring ground 130 kilometres out the road. We've got great relationships with our landholders. We've got power and water through the site, a rail line that links us to a concentrate export port at Townsville. Importantly, the district is prolific and has produced over 20 million ounces of gold and 14 million tonnes worth of EMS material in its lifetime. And we've got a large polymetallic resource, 12% zinc equivalent resource, which comprises a significant amount of copper and gold. We've put that lease holding together in 3 years since we've been in existence, and that resource, although it does contain a significant portion of zinc, also contains 190,000 ounces of contained gold and 53,000 tonnes of contained copper, and we believe we're really advancing that part of the portfolio. So tomorrow represents 12 months since the acquisition of the Greater Liontown component of this resource, and in 12 months we think we've achieved a lot. We're going to fire through some bullet points. So day one we landed, there was 6,000 metres of diamond that hadn't been processed and released to ASX, and in that we saw some pretty spectacular results. We worked our way through that. It was a great free kick. From that, we've developed a new geological model. This is a VMS system laid on an ancient seafloor. We're now mapping thermal gradients, and we've come up with a new model for the copper and gold. Off the back of that, significantly, we've now completed our third RC program. We've had stellar intersections, including 20 metres at 18 grams gold, 17 metres at 22 grams gold, and significantly, there's a fair proportion of free gold in that, in those numbers, so we do believe that will be easily recovered. We completed a resource update, which added 21% extra tonnes, but importantly added confidence to the resource, and we went from 32% indicated resource to 63% at Liontown itself. And importantly, we're doing the first regional gold exploration in the district. We've been back through, and that you can say hand on heart, for the last 70 years there's been 3 years of dedicated gold exploration on this tenure. And the opportunities are huge. We're doing work around the old Highway Reward copper gold mine. It was about 4 million tonnes at about 5.5% copper and 1 gram gold. We're doing work around there. Now, important, and hopefully we've got time to step through a really quick video of how these systems formed on a seafloor. It provides context. So the black smokers spewing metal onto the seafloor, and as the fluids cool, we precipitate out zinc, lead, silver on the seafloor. Importantly, copper and gold come out while the fluid is hotter, so we see a stockwork underneath of gold and copper material, and that permeates out into permeable footwall stratigraphy, and that's what we're chasing at the moment. Feeders and footwall stratigraphy, and that's what's generating some of these fantastic results. It's a beautiful little animation. I wish this was around when I did my undergrad, would have painted it up so much easier. And I thank our friend Elias Aguera Prado from the Geoscience Geological Survey of Brazil for the video. So what's that mean? Well, we've got a sediment volcanic interface. That's the red shape here. That's lead, zinc, silver rich. Our focus is on the footwall lode in the orange, which is a copper gold rich lode. And we consider these as being potentially viable from one underground or open pit mine environment when we get to that point. We've now delineated a nice little parcel of 260 by about 140 metres that is high-grade gold and really gold-dominant mineralisation. It does grade into high-grade copper at depth. We recommence drilling. We've now completed 17. We're on the 18th hole at the moment. We're waiting on assays from recent RC drilling and they'll be out soon. This footwall stratigraphy extends over a mile of strike extent, and significantly the first mine in the district was the historic Carrington lode, which was mined for 28,000 ounces from 22 grams a tonne between 1905 and 1911. Lead, silver, zinc was found in the 50s and mined, and since then that became the core focus. We're turning back the clock, going back to a copper gold focus, and we've got a huge paddock off to the east that's ripe for the picking with some nice numbers to give us a head start. So that 12 months we think we've achieved quite a lot. It's a fantastic mineral system. We've got 85 kilometres worth of the Mount Windsor volcanics to explore, and we'll keep testing extensions to the high-grade mineralisation at Liontown. Now, importantly, the ground's always been held by the same owners that have had the Thalanga mill. And while having a mill is great, it also means that you've got to fill the mill, and exploration in the district hasn't progressed out beyond the realms of Thalanga itself and the upper limits of the Liontown resource. We've got an opportunity to go and test some fantastic exploration targets, analogues to the Highway Reward copper gold mine at Coronation, Truncheon, Highway East, and we've just completed some geophysics and announced that. We've got shallow gold targets, gold-only targets, fantastic targets, Trooper Creek, Wilbur's Hill, Double Event, and we are using novel ways to get through the geophysical techniques to refine those massive sulphide targets, and later in the year there will be another resource upgrade. And just a quick slide to touch on before we go. This is a district that time has forgotten. Gold's a forgotten commodity. So we've got 15 million ounces produced out of the north block there. We've got this blue shape, which is the Mount Windsor volcanics, and you've got Pajingo and the Drummond Basin, another 4 million ounces produced. That blue block is the Mount Windsor volcanics. It's largely been explored for base metals. We've got Esso, who did the bulk of the work in the 70s and 80s, 26,500 soil samples. Less than 2.5% of those were assayed for gold. None of the stream SEDs. And yet these rocks have seen all the same deformation events that put the 15 million ounces at Charters. It's a real oversight. We're happy to rectify it, and hopefully we bear the fruit of that. So as we touched on, large high-grade resource. We know where we're going next to grow that resource. We think we've got the runs on the board with some stunning hits so far. Based out of North Queensland, close to the projects, active on the ground on a regular basis. We're looking for big systems, big scale systems. Copper gold's the focus, and Ravenswood is the flagship. Thanks for your time. I think I've just got in. Come and see us, booth 94.
Thanks, Chrissy. Thanks, Vertical Events. Great to be back in Sydney. Today we're going to talk about our vertically integrated mining and refining business located in the north of Vietnam, where we're looking to produce the nickel-based chemical products for the lithium-ion battery. So we are well located on the doorstep of the major players in the lithium-ion battery industry, being South Korea, Japan and China in the north of Vietnam. We are looking at a mining and refining. So the upstream is a previously operated nickel mine. We've gone in there and we've delineated 500,000 tonnes of nickel within a large open pit with a low strip ratio. The downstream is where we're converting nickel concentrate and other nickel products into the precursor cathode active material, which is a nickel, cobalt, manganese 811 product which is a battery-grade product for the lithium-ion battery. So you can see here, we're looking at a partnership model. This is a mega project. It will need a large partner. We're looking at partners from those battery hubs being Korea, Japan, China. We're also looking at potential local partners from Vietnam, so talking to a number of major players in Vietnam. So we've got the two main assets being the Ta Qua nickel project, where we have 500,000 tonnes of nickel. We've also recently have an option to acquire the Woboden nickel project in Manitoba, where there's 1.3 million tonnes of nickel in the Manitoba region. We also have strategic investments in Manitoba. We like Manitoba because it has hydroelectric power similar to what we have in Vietnam. So we've got abundant hydroelectric power, which is driving our green credentials. So you can see here, this is where we're located in the north of Vietnam. We are well located with two of the largest hydropower plants in Southeast Asia in our region. The mine and the refinery sit on the river system in between those two hydro dams. We're actually looking to use that river system for our logistics and barging. We'll now zoom in a little bit closer to the refinery location. So you can see here, this is our design for the refinery. We have two distinct trains, which allows us to stage the capital required. So we have two trains. Each train will produce around 20,000 tonnes per annum of nickel, and it requires about 200,000 tonnes per annum in the front end. One of the benefits of operating in Vietnam is that low cost of power. So the hydro power is around 7 cents per kilowatt hour, much lower than our peers in Australia. The low labour costs, very lucrative and generous tax incentives in the early years of operating means that we will be able to compete with Indonesian nickel. So you can see here on the cost curve, the Indonesian nickel players. In that recent dip in the nickel price to about 16,000, you can see that they were under pressure. We will be able to ride through the cycles because of that low cost environment that we have in Vietnam, and also the efficiency of our downstream processing and the vertical integration of the mine and refinery allows us even lower costs as well. So we're confident we'll sit in the lowest quartile, and we will be able to compete with the Indonesian supplier that's coming through at the moment. One of the other benefits of that, the location, is we will have the lowest CO2 footprint nickel in the industry. We've done some work with Minviro, they're the world leaders on life cycle analysis of carbon. This has been independently verified by the Nickel Institute. So we will produce our nickel precursor product with 9.8 kilograms of CO2 per kilogram of final product. So remembering that has not just nickel, but also has cobalt, manganese in that ratio of 8:1. We're not going to stop at 9.8. We want to get to net zero. You can see a number of initiatives here. If we are able to initiate a direct power purchase agreement, we can reduce by 2.4. If we can bring in the nickel from Woboden, which is also the hydropower from in Manitoba, reduce further. So we're confident we can go towards net zero from day one. If you compare that to ourselves, so we're sitting at 9.8, we think we can get to 1.4 or lower. Our peers in Indonesia, 2 to 6 times the CO2 footprint. That nickel just is not going to reach a battery in some of these premium brands, your Mercedes, your BMWs, your Audis. They're not going to allow that type of nickel in their vehicles. And we're already having those conversations around the CO2 footprint is just so critical to the reputations and the brands of these premium electric vehicle manufacturers. So one of the other benefits of our downstream processing that we're very flexible on feedstock. So you can see here we can take mixed hydroxide precipitate, which is a product from the nickel laterite industry. We can take different concentrates with that are not suitable for smelting, for example, a high arsenic or a high MgO concentrate that is considered a deleterious element in the stainless steel industry. That is suitable for our process. Nickel matte, The other benefit is we can also look at black mass as well, which is the recycled product from the lithium-ion battery. So really driving home that circular economy and the ability to not just produce nickel, but also recycle nickel back into our refinery. So you can see here, half of our product will come from the Tarkwa nickel mine, which is the previously operated nickel mine in Vietnam. The other half we're hoping will come from Woboden and the Manitoba region. And so we see the Manitoba hub as our second home, and we're looking to bring in nickel from that Manitoba hub into our refinery and using that abundant renewable power and the benefit of those low labour costs in Vietnam. So you can see here the mine and the refinery are well located on the river system, so we're using that river system to transport our concentrate from the mine to the refinery. So at the mine level, we've over 25 advanced stage targets. We've probably tested about half of those targets. We've only drilled to about 300 or 400 metres. We have many targets at depth that we haven't tested. So we think there's a lot more to be found. We've delineated at least a 10 to 12 year mine life already, and we think that's enough to get us started. So you can see here we're looking at a large open pit with a large concentrator. The existing concentrator sits here, so we have an existing footprint, an existing mine, and an existing team that's been operating for over 20 years. So we've got a long history of operating. Some of our geologists have been on this project for over 20 years. So that's really given us a great relationship with the local government in our permitting process. You can see here we're looking at an integrated waste landform, which is a co-disposal of waste and tailings, which reduces our footprint and improves our ESG credentials even further. So you can see here, we got in there around 2019, we drilled over 100,000 metres. We've defined a good 10 to 12 year mine. Most of that sits in this one big open pit, very similar scale to like a Mount Keith in Western Australia. So it's a big bulk tonnage open pit mining. We also, so the Ban Phuc is that large open pit. We've delineated some small high-grade undergrounds at King Snake and Ban Chang, which is a high-grade sweetener, but the majority of the tonnes will come from that big Ban Phuc open pit. So you can see here, very low strip ratio, less than 3 to 1, around 10 to 12 years, around 18,000 tonnes per annum. So this is a large-scale open pit mine. We'll produce nickel concentrate and then we'll take it down to our refinery and produce that chemical product for the lithium-ion battery. So you can see here, a 6 to 8 million tonne per annum concentrator, so a large-scale bulk tonnage open pit mining. A short truck to the port, and then we'll use that river system and then take the concentrate up to the Tarkwa refinery. So 50% of the feed will come from Canada. So we particularly like Canada because it's got the same geology and it's got the 100% renewable power. So Manitoba is the region. We have 2 investments, one in Monago and one in Lynn Lake. These are 2 of the better undeveloped nickel sulphide projects in the state, and also looking to the option to acquire the Woboden project. So this will be our Manitoba hub, which will bring nickel into the Tarkwa refinery. So we think we've got our foot on 4 of the best undeveloped nickel sulphide projects in the market. So vertically integrated mining and refining, some of the largest nickel sulphide resources in the industry, first quartile cash cost position, and as lowest carbon footprint. So, and looking at a partnership process to unlock value. So thank you for your time.
Thanks, Chrissy, and thanks to Vertical Events and to everyone for hanging around. Now for something completely different, exploration company based in Mongolia. I won't try and flip through all the slides and make you dizzy. I'll just talk to it. If you want the detail, come to the booth and have a look at the prezzo. A couple of geos there that would be happy to talk to you. That's a picture of the Harmagtai exploration camp in the South Gobi Desert. I was dragged up there just before COVID in the dead of winter, January 2020, and what I saw in the core shed, and it wasn't that core shed, it was an old set of sea containers with a roof on it, was quite a complex porphyry deposit with cross-cutting tourmaline breccia veins and all the things that said to me that this has got real potential. Our strategy was quite simple: to put together a really good quality geological model and mineral resource estimate, do a scoping study to show it worked, and then find a funding partner to make this work, because what we were was a little company with a big project, which is like having a tiger by the tail. There's the disclaimers. So why Mongolia? In a nutshell, Mongolia is elephant country. The Central Asian orogenic belts run through there, through to the stands in the west. Highly prospective for gold and copper and base metals. Next door in Kazakhstan, there's some huge deposits, as there are in China. Relatively underexplored since the Soviet era. And importantly, developability. We're talking about a country with relatively low ESG barriers, not because their standards are low, because the complexity is low. It's sparsely populated, the ground is flat, and if you can find something there, you can actually build it. It does have a really good mining culture. It's a young democracy. The government would be the first to admit they've made mistakes, but it is a jurisdiction that is improving all the time. And of course, it's on the border of the biggest market for copper in the world. And our guys and girls have been operating in the country for 20 odd years. We've got really good local teams who can work safely and efficiently, and we've established great ESG credentials with our neighbours, and we know what we're doing in Mongolia. As my kids would say, self-rated, but we've got a pretty strong team, deep Mongolian expertise, deep expertise in the exploration, development and operation of porphyry projects. We've got a partner in Zijin, which I'll talk about in a minute, who've got a couple of members on our team as well. Current market cap 120, enterprise value 110 odd, and we're sitting on 3.5 million tonnes of copper and 8 million ounces of gold in largely indicated resource. So I'll tell you about the project. That's a picture taken in the summer of the actual deposits being drilled. In the background is a sedimentary basin which has got a large artesian water resource on it. Hamagtai currently has a resource of 1.3 billion tonnes, containing 3.5 million ounces of gold and 3.5 million tonnes of copper and 8 million ounces of gold. We did a PEA in 2022 which described a standard open pit operation with a standard copper concentrator which would produce approximately 50,000 tonnes of copper and 100,000 ounces of gold per annum for 30 years. Zijin Mining Group, one of the world's fastest growing and largest mining companies, were attracted to this. They came into the company with a placement, taking 19% of the company and also creating a 50-50 JV at the asset level for $35 million US into the project. We're currently investing that money on a pre-feasibility study. Xanadu's the operator. We're 12 months into an 18-month journey and we're well on track to deliver a pre-feasibility study in September of this year. On top of the low technical risk common garden variety copper mine the technology this is based on, we're looking at 3 significant uplifts. One is treating the oxide material, which is currently costed in the model as waste, through heap leaching. We've got great leach results which we released to the market recently and are looking to have a heap leach to take advantage of that pre-strip material. We've looked at coarse particle flotation, hydroflow technology, which is a way of trading off a little bit of recovery for a lot of throughput. We think that has real legs to improve the second stage of our project, and we're also looking at electric haulage systems to reduce the number of trucks and eliminate fuel burning from our fleet. So it's a great project. It's well supported by infrastructure. The South Gobi region of Mongolia has road, rail, water through groundwater and power. The power currently comes up from Inner Mongolia on the grid. We've also done a study to look at solar and wind, which we believe can produce about 50% of our power requirement. Believe it or not, although it was minus 38 degrees last time I was there, it's sunny and it's windy. So we're currently in the process of delivering that PFS. That gives us an opportunity to negotiate with Sijin how to take this project forward. They obviously have the balance sheet and the capability to own and operate a large mine such as this, and we'll deliver on our part of the bargain in September, and we need to negotiate a funding way forward with them in the December quarter. I'll just skip through all the detail. Importantly, this project is a project that can be in production in 2027, 2028. It is not on the never never. This is on a fixed path to production. We are an exploration company. The company's got two other major projects on our hands. One is Red Mountain, which is a similar geologic setting to, say, North Parkes in the Lachlan Fold Belt. We have a 100 square K lease there, which has got gold and copper identified over 14 kilometres. It's all porphyry-related type mineralisation with some skarn and some epithermal. Just completing a 5,000 metre program there, and you'll see some news flow on those exploration results shortly. We also recently signed an earn-in farming agreement on something similar to what you just heard about, a magmatic nickel-copper system up in the northwest of the country. It's a very early stage project that has real potential. There's the same belt of rocks next door in Kazakhstan. There's some massive mines. Those come through into this part of the world where our project is. There is geochem there, lots of nickel and gold and copper geochem from previous Soviet era exploration, and we're really pleased we'll get there as soon as the snow melts. So as a company, we're an exploration company. We found a big deposit. The problem with these things, the barriers are finding a way to fund it and getting past the ESG issues to get it built. Those things are under control. This thing will get built, and we're looking forward to updating you in the future. So thank you very much. Thanks, Chrissy.
Ladies and gentlemen, thank you very much for your time today. Alligator Energy Limited is South Australia and Queensland based. We have an advancing in situ recovery, in situ leach uranium project 20 kilometres south of Whyalla in South Australia. And as Chrissy so kindly explained, it is a paleo channel hosted system. And I'll explain a little bit about that and give you some overview of the project. And that's what the project looks like in front of you there. Our company formed in 2010, at the tail end of the last uranium boom. We've been exploring in Arnhem Land and expanded into South Australia in 2018 through to 20, and are now advancing a key project there called Samphire. We have a market cap of around 250 million. We have about 33 million cash. We have a resource which is at the stage of a pilot field trial, advancing into feasibility and mine approvals. So that's the status of the project. I won't go into our exploration work today. A little bit about the market, the uranium business. You've seen a few things from players here today, and you'll see a bit more. The uranium spot price is a driver of sentiment. The uranium long-term price is a driver of sales. And having been involved in the uranium contracting business overseas, it's the uranium long-term price that will make sure production is economic. But nonetheless, investment is important. There's also a very big supply-demand fundamental I won't go into, but a key driver right now is reliability, the backup for renewable power and the advances technically in new nuclear, which has changed the face and the view of how the world's seeing it. So happy if you come to our booth, we can talk more about the market, but I'll talk about our Samphire project now. A summary, 20 kilometres from Whyalla. JORC-compliant resource of a size suitable for an initial start-up operation of 1.2 million pound per year, a target range over a broader area of 15 to 20 kilometres, which I'll talk about, a robust scoping study which gives us an NPV of around 250 million at the current price, long-term price of $75 a pound. Awaiting approval to jump on site in the third quarter this year to construct a pilot plant. We've already fabricated the plant and drilled monitor wells, ready to run a pilot process to the latter part of this year leading to feasibility. And we have some strong ESG credentials in the fact that we are looking at how we can minimise the carbon footprint of this project, which I won't have time to go into today, but happy to talk to people about. In situ recovery, in situ leach in paleochannels is relatively simple but complex chemically and hydrogeologically. Basically, paleochannels are incised channels, ancient channels into granites or rocks underneath, later filled with sand and with sediments over the top, and then the sands accumulate uranium over time, usually from a source of uranium close by. It deposits out, hits a reductant and becomes a solid around the sand grains, but with pore spaces in between. You reverse that process in situ recovery mining. You circulate the groundwater, the saline water in this case. You add a small amount of acid or low pH, in this case 4 litres for every 10,000 litres you circulate. You then put in a lixiviant which dissolves the uranium like sugar in hot coffee, brings it out of solution through an ion exchange plant on the surface, remove the uranium and recirculate the fluid. So it's a simple solution mining technique. You can see the location there, 20 kilometres south of Whyalla. The Blackbush deposit is the main deposit I'll have a talk about. That location gives us great advantages in terms of existing companies involved in the resource industry based out of Whyalla and exposure to uranium mining expertise to the north of the state. Some metrics from our scoping study we released in December last year. The top line is the metrics we released at $75 a pound. A good return, a good NPV, US dollar price, which is when we tend to compare. We sell into a market dominated in US dollars. $33 a pound, a little higher, but we've been a bit conservative in some of our estimated costs. And going forward, a fairly cheap capital cost because in situ recovery mining, you do not move any dirt. You don't mine it, you don't grind it, you don't crush it, and so you're not handling material, you're basically solution mining. Now, I will make a point here that in our team, our Chief Operating Officer, Dr. Andrea Marsland-Smith, is one of the more senior managers from Heathgate Resources, which runs the Beverley 4 Mile projects in South Australia. Andrea has developed our team. We have a full production-ready team, including process chemists all the way through hydrogeology, principal geologists and project managers ready to go. So both on our board and in our management team, including myself, we have a lot of mine operations experience in uranium, including in marketing and exposure as well. The bottom line here is the same study metrics at $90 a pound, and that improves the NPV dramatically. This is a picture of the Blackbush West and East deposit. So that's the small deposit we've found so far, 20 million pound or just under, enough for an economic project to kick off, and that's what those study metrics are about. But we're expanding. We're drilling resources around, or drilling resource potential around that area now. A lot of the holes that were discovered by our predecessor company are above cut-off grade. We just need to put them into these what's called roll fronts, where you get the continuity of mineralisation within channels within the sands. And so that's what we're doing and expanding now. So that area of resource footprint is around 20 million pound or just under. Now this is the area of channels that we have in the district within our tenements. That pink area is the resource we currently have. It's far less than 10% of the total known channels. Only about 30 to 35% of those channels are drilled and have some potential mineralisation. The rest have not been touched. Now this is what happens in situ recovery locations. You tend to have a starter project, you expand it from there, you've got cash flow, you move into other areas of channels, you don't need to build a new plant. You then bring the fluids back to that centralised plant. So the Beverley uranium mine in South Australia started in 1998 at 1.2 million pound a year. It's now over 4 million pound a year. The Boss Energy Honeymoon project started 14 years ago at about 1.5 million pound. It's now restarting at 2.5 million. The same in Wyoming, the same in Texas. This is how you develop in situ uranium projects. We're about to do a field trial, and this part of the resource, 3 small rings, 20 metres radius, running solution through for about a month up into a small pilot plant. The pilot plant is a simple containerised IX columns and reagent storage, but you need to run this like a small uranium mine. So we're finalising the approvals now to get on the ground in third quarter construction, operating it in the fourth quarter. It will only run for 3 to 4 months, but give us all the parameters we need leading into the feasibility study. I won't go into our exploration. We have a lot of exploration in Arnhem Land, where we've been operating for more than 12 or 14 years. We've had 40 Indigenous employees, and we've focused a lot on the large-scale high-grade. And we have greenfields exploration for uranium in the sediments overlying the Cooper Basin, which are a continuity of sediments which come up from the Beverley, 4 Mile, Honeymoon uranium mines. And just to add a little bit of icing on the cake, we've recently invested in a private company which is looking at in situ recovery copper in South Australia from the oxide copper deposits through South Australia. To finish, a news flow. It's not super pretty, but it just lists what we're trying to do over the next quarters and well into 2025. And with 33 million cash, we're well funded for this program and carrying forward. So thank you very much. Happy to have a talk with you at the booth with our chairman and our chief operating officer when you have some time. Thank you.